Subramanian back with us, our budget editor. It's been a long day for you as well. So,
yes, for you too.
Absolutely. So let me get you to wrap up for us where this now leaves us, how much it moves the needle as far as growth is concerned, and what it means for the economy.
I think I'd stress two aspects. One, this budget clearly lays out a vision for India to record 7% plus growth in the coming decade. So I think the talk of Amrit Kal has actually been walked in this budget. And I will particularly emphasize three areas there. The 1 lakh crore allocation, which is 50-year zero interest loans for research and innovation. I think that's extremely important. You would remember, we talked about the steps that needed to be taken on innovation. For the first time in 2020, India broke into the top 50 economies on innovation. We cannot become the third largest economy without us being at least in the top 10 in innovation. I think in that context, this is very critical. Second, the capital expenditure, the 11% increase is good, but I think there is scope for further increase because the demand for infrastructure, I think, still remains very large. Again, if you have to be an advanced economies, our infrastructure has to rival that of the advanced economies as well. So I think that's a second. And the third, the incentives that are being provided to states for them to actually invest in infrastructure and capital expenditure. I think there's been very good take-up of that. Last year, the 1.3 lakh crore provision of that 98,000 crores has already been taken up, and that has led to a 47% increase in the infrastructure by states, which is a very large number. So I think continuing on that is, I think, very good. So net-net, when I look at, I think there's vision for growth that's articulated. At the same time, on the macro fundamental side, something that I carefully watch, I actually think that it is a case of under-promising and very likely over-delivering, because, the reason I say that is if you look at the 5.8% number, which is 10 basis points lower than the 5.9%, that actually assumes, and Lata was pointing out very well in the morning, if you look at the run rate for the tax revenues, that is about 14%, and yet the what has been assumed in revenue growth or what has been sort of put in the revised estimates is about 11%. So there's actually a likelihood that the actual, when the final number comes in, the FD will actually be less than even 5.8%. In a similar way, unless something, and I think it's possible that the full budget, the numbers may change, but we can only project based on numbers that we have currently. There as well, the conservatism is reflected. Though
Mr. Somanathan refuses to accept that, he says we're not being conservative, we are being realistic.
Well, having worked with him very closely, I would actually, we would have discussions on this. I find that conservative. You would recall on one occasion, I think the budget had 10.5%. The economic survey had projected 11% nominal growth, and ma'am had responded to that as well in the press conference. So my sense is, and I actually am saying this, with conviction. If you look at 7% real growth and 4% GDP deflator, I think that translates into 11.3% of nominal growth. And with tax buoyancy having been about 1.5, 1.6 in the last decade, and especially this year as well, even a 1.2 tax buoyancy is actually conservative. And what is being assumed is 1.1. So I think with 1.2 tax buoyancy on 11.3% nominal growth will translate into 13% plus. So I think overall fiscal, if indeed 5.1% is achieved in the coming year, that means the path towards 4.5% will be something which will be a very credible one. And as I have mentioned earlier, I hope the rating agencies are looking at this, because given the kind of fiscal transparent path, consolidation path that India has achieved, I think it'd be absolute travesty if the rating agencies do not account for
and I asked both the CEA as well as Mr. Somanathan that question, whether they expect an upgrade, and they said they don't expect anything from the rating agencies. As Mr. Somanathan spoke about double standards, and he said, we know that they're not fair, so we don't expect anything.
No, I think that is, I would say that is out of the frustration, sheer frustration at the double standards that are actually, and I think here, for the benefit of our viewers, I must highlight that, as we had shown, the fifth largest economy in the world has never ever been rated BBB. And when you look at rating, that is actually a reflection of the ability to repay. and willingness to repay. India has never ever defaulted. So the willingness to repay is gold standard, and all our debt is domestic. So, and GDP is growing so well, so the ability to repay is there as well. So I don't know what the rating agencies actually, what model they use. It is flawed. As a financial economist, I can say with absolute conviction.
Well, that is a matter of debate on another day, but let me also bring in Christian de Guzman of Moody's Investor Service. Christian, always a pleasure. Many thanks for joining us, as you always do on Budget Day. Very aggressive fiscal consolidation roadmap being laid out by the Finance Minister, 5.8 to 5.1. What do you make of the glide path, and overall, your take on the budget?
Okay, well, happy to join the debate, but let's not get into that. But perhaps first, I have been asked all day, are we?
Want to, Christian? I'm happy if you want to respond to that.
It's not my place to respond to that. All I can say is that most countries have in fact not defaulted. So lack of a default history is not really a marker of a high credit rating. But
right.
But perhaps just talk
yes,
about
overall, Christian. Yeah, the fiscal consolidation roadmap.
Yes. I do believe that we have given credit for that, for the fiscal deficit consolidation and the progress that has been made. So indeed, with the interim budget that was announced today, there is a fourth consecutive year of narrowing fiscal deficits as India has emerged from the pandemic. But I think let's not lose sight of where we started. Prior to the pandemic, the union budget's deficits were actually well under 5%. So in the 5 years in the 5 years prior to the pandemic, that average was actually 3.8%. So we're looking at perhaps at a forward-looking basis, approaching 5%. We're still above where we were when we had India at Baa2. I think a couple of other things when we look at our fiscal assessment is the stock of debt. The stock of debt is also much higher than what we had seen when India was at Baa2. And I think the more important thing for us is debt affordability. And interest payments to revenue here again is in a much weaker state than it was prior to the pandemic.
Of the many announcements outside of the fiscal deficit reduction that came in, Christian, the CapEx spend 11% over a fairly high base because we're coming off of record CapEx allocation in the previous budget. What do you make of that and its ability to turn the needle for growth?
Well, indeed, we are very positive on growth. And so I guess to the point about our model and our methodology and our approach to sovereign credit ratings, we have incorporated the fact that we do believe India is one of the strongest economies in the world. We do expect India to be the fastest growing economy amongst all G20 economies, not just this year, but also next year. So that part is really well recognized. What we aren't seeing so far, perhaps, is how that infrastructure investment that you asked about is really translating into much stronger private investment. We haven't seen that crowding in effect yet. Having said that, I think it does pave the way for that crowding in as some of the challenges facing the global economy today perhaps abate when we're thinking about, for example, the very tight global liquidity conditions on the back of tight Fed monetary policy, which we do expect to ease going forward. Now, I think also just with regards to capital expenditure as a share of total expenditure in the union budget, that has been growing. That is positive. That does flag a better quality of spending. At the same time, let's bear in mind what I mentioned about debt affordability. Interest payments, debt servicing on the very large debt continues to be even larger than the entire CapEx.
Yes, that is something that you have pointed out as a concern previously as well, but the government are sanguine about that and its ability to pay. But Christian, before I let you go, there were a couple of new announcements that came in from the government in this interim budget, like a solar rooftop scheme, a new housing program, which of course the allocation has not been apportioned just yet. As we now close out the interim budget and look ahead at the grand finale, the final budget, what would your expectation be? Do you expect a significant change in these numbers?
I do expect the government will continue to communicate their commitment to fiscal discipline and working towards that fiscal deficit target. However, I do want to flag the very challenging global conditions facing India. Now, once again, these are global challenges, not just Indian challenges. This could be regarding the climate shocks, including El Nino, the perennial monsoon issues, as well as the potential for shocks to emanate from the current situation in the Middle East. So we may find ourselves in a situation in a couple of months' time where the government will have to act in a fiscal sense to address some of these issues. So, but as yet, we are still looking at a trend of fiscal consolidation being maintained even after the election.
Yes, that certainly is the hope, and that's what the government has signaled very clearly in its interim budget. Christian, always a pleasure. We look forward to seeing you again when the government unveils its final budget. Let's see if it is going to be Nirmala Sitharaman's 7th budget or not. We will have to wait to see. But thanks very much for joining us. KV Subramanian, what an absolute pleasure it has been having you here on CNBC TV 18 as our budget editor. Thank you for all the behind-the-scenes look at what transpires in putting the budget together and for analyzing in real time the budget, interim budget of 2024. We are going to take a break.
My pleasure too, Sharon.
Thank you so much. We are going to take a break. A lot more coming up. Don't go anywhere. We're back in a moment. For more news and updates, all you need to do is follow CNBC TV 18 on all of our digital platforms.